From Daily Forex, this is Chris taking a look at the US dollar against the Swiss franc. The US dollar has fallen pretty significantly during the early hours on Monday, but it does look like it's making a bit of a recovery. It's interesting that the 0.8750 level has offered support and possibly the 50% Fibonacci retracement level. Keep in mind, this is a market that has been very wild over the last couple of weeks as we've seen the US dollar plunge overall. But that being said, the interest rate differential does favor the United States. And of course, you have to wonder exactly where Switzerland falls in all of this because the greatest safety currency would be the US dollar, possibly the Swiss franc. So now you have a situation of which one of these safety currencies are people going to run to. The US dollar does look awfully cheap against multiple currencies at the moment. So that is something that you need to keep in mind. This is not to say that the US dollar can't fall any further, but this is definitely an interesting place at which you would see a little bit of a bounce. On the other hand, if we break down below the 0.8750 level, then we could see the market drop down to the 0.87 level, possibly the 0.86 level after that. I'd watch not only this chart, but the euro against the US dollar, as well as the British pound against the US dollar, to get a gauge on whether or not money is flowing into or out of Europe in general. And if it's flowing out of Europe, it almost always ends up in the United States. So, with that being the case, it's a very interesting area. I am very interested in getting long of this market again and collecting that swap that you get at the end of every day. But I just don't have a signal quite yet. A little bit more forward, upward momentum, then I'm probably going to jump in.